Blabstud. Mr. Blabstud or Miss Blabstud, can you can you stay or stick around for a few minutes just to make sure? Jason, can you make sure that I don't want anything to happen. So and why I must have just pressed record. So anyway, all right. I got to shake it off like Taylor Swift says and move right along. So welcome everyone. Hopefully folks will be getting this message in the next couple of minutes. I'm also going to share this with my Twitter following. And why is that not happening? Mr. Jason, I don't know what's going on with Blab right now, but if you could be so kind to share this broadcast out with the Blab folks, or at least get it to my Twitter following, but everything's frozen and I just don't have time for this right now. It's getting on my nerves. All right, so happy Friday. Welcome to New Day Consulting Systems Equity Crowdfunding broadcast or webinar. I am so happy to have Kendall Almerico, who is a thought leader in this area. And one of the main reasons why I wanted to bring Kendall on today is because there's a big date coming around and it's called May 16th. And May 16th is a day that will live for infamy, or maybe just everyone's just going to fall out under the glory of it all. But it's finally the day where the public can actually participate in equity crowdfunding. And so I wanted to bring Kendall on, and he graciously agreed to do so. Kendall, if you don't know, is I wrote this down. I said, Kendall, that you are a bit of an equity crowdfunding rock star. You are like the Mick Jagger of equity crowdfunding, and I just wanted to put that out there. I also wanted to make sure I recorded it, and you can use those words. You can actually quote.
I will be now changing my intro at all of my speeches around the world to the Mick Jagger of equity crowdfunding. And then I'll break right into sympathy for the devil, or maybe time's on my side. One of those two clearly would be perfect for me.
So, I'm just saying, you are definitely a rock star. And I have to say some things based upon your bio, because a lot of people may not know you. And in light of the technical glitches, this webinar is more for the future as opposed to necessarily the people who are here today in light of the drama that we just dealt with. So I wanted to make sure that I gave you a proper introduction for that purpose. Kendall is considered one of the top crowdfunding experts in the United States. He was recently named the 17th most influential thought leader in the crowdfunding industry by VentureBeat, hence the Mick Jagger of crowdfunding, and was the top ranked practicing attorney on the prestigious list. Kendall is a regular columnist on the Jobs Act and crowdfunding for Entrepreneur magazine and Crowdfund Insider, and he's definitely a highly recognized keynote speaker. And so there are a lot of people that come on Blab, and there are a lot of people that come on webinars, and there are a lot of people that do Google Hangouts, and they claim to be thought leaders, but I can definitely say, for those of you who are here now, and for those of you who are going to watch this recording later, Kendall is definitely a thought leader. He's just not, he doesn't just put that on his name. He actually is one. But I have to say that, and it's not being arrogant. It's not being arrogant. It's just the truth. It's just the truth. So I know we only have about 50 minutes left, and I wanted to make sure, Kendall, that we started off with a bang. So tell me really what this May 16th day is all about. I know I kind of summarized it, but what does it mean for you, and what does it mean for the investing public, and what does it mean for small businesses that are interested in equity crowdfunding?
Sure. Well, let me backtrack for just 1 second and point out that there may be people that don't even know what crowdfunding is.
Well, that's true.
And it probably, just to lay a little framework here, around 2009, this world of crowdfunding sort of popped up out of nowhere. And has become a $34 billion international industry in only 5 or 6 years, which is remarkable. Anyone who's ever seen the website Kickstarter or Indiegogo or GoFundMe, those are probably the three people are most familiar with. That's crowdfunding. It's where someone goes online, shows a video, tells about something they're trying to raise money from, and then through the website raises small amounts of money from a large number of people to basically get together a large sum of money. The Kickstarters of the world, the Indiegogos of the world, the ones that have been around since 2008, 2009, when the financial crisis occurred, those websites are what's called rewards crowdfunding, where basically someone gives money to someone else in exchange for a reward, a perk, but not part of the company. They're not buying stock or equity in the company. They're basically getting something in return for money that's being given to them, but they don't own part of the company.
Right.
In 2012, Congress passed a law called the Jobs Act. And the Jobs Act legalized doing the exact same thing through different kinds of websites, where instead of just giving away a product that you're making or a t-shirt in exchange for a donation or a film credit at the end of the films in exchange for a donation, you can actually give away part of your company. You can sell stock, no different than Disney would sell on the New York Stock Exchange, or IBM or Apple would sell. Selling stock to the general public, you're allowed to do it online. It looks exactly like a Kickstarter type website. You still see a video, you still read about the company, you still get excited about it, and you still invest right through the website. That's called equity crowdfunding, and that law went into effect legally in 2012, but it wasn't allowed to be used by anybody because we had to wait 4 years for the Securities and Exchange Commission, the SEC, to pass rules that would tell us how we were going to use that law. Those rules were passed last year, and on May 16th, as you said, Kim, May 16th, 2016, 4 years and a month and a half after the law was actually put into effect, we will finally be able to, we've been through a presidential cycle, we've been through a couple of leap years. I have aged, I now look like Mick Jagger does at 70, not at 30, but the law now is in effect. And on May 16th, will be the first time anyone can actually use this law to, if you're a company, raise money by selling stock in your company online as a private company. So this isn't a big, giant multinational company. This is for startups and small businesses to be able to raise money by going out to people on the internet and saying, hey, would you like to invest in my company? That was illegal for 80 years. It's now going to be legal to do as of May 16th.
That's wonderful. And so I know there must be so many small businesses or businesses, period, that are excited about using this new law, this new tool to raise money, because that's a crisis, that's an issue for everyone, or every business owner is having enough capital to actually do what you need to do to grow and to scale. And so my question for you is, what's the ideal business really for equity crowdfunding to use this new tool?
Well, you know, it's funny, Kim, when I speak, and I speak internationally, nationally, I speak all the time about crowdfunding and about the Jobs Act. And one of the first questions I generally ask the audience is, how many people out there, raise your hand, how many people need to raise money for their business? And, you know, 90% of the people will raise their hand. And then I point at the other 10% and say, you're lying, because everybody needs to raise money. There's no business that sits there and says, wow, we have so much cash, we don't know what to do with it. Everyone needs to raise capital. And you're always either going to a bank, trying to, get a loan or a line of credit, or borrowing money using credit cards. This is just another means of getting capital for your business and going to people by selling stock. So the ideal businesses for this are any small business that actually needs cash and has the ability to go online and explain in a cohesive fashion their business to people and get them excited about their business. I use this example a lot. It's a lot easier to go out and say, hey, I've invented this new gadget that's really cool, and people are going to love this gadget, and show the gadget to people on a video, get people excited about the gadget. That's the easiest way to raise money, but this can work for anyone. I mean, if you can go online and explain your business model to people and explain why it's a good investment and get them excited about investing in you as the business owner, it can work for anyone. There has been buildings, hotels, restaurants, medical practices. There's been almost anything out there can use this, but you've got to have the ability to put yourself out there on the internet and tell people, this is why I'm raising money, and get excited about it, because it's not for the timid. This isn't someone who wants to hide behind, this isn't for the Wizard of Oz behind the curtain. You have to be out there on the internet, right in front of people, and tell them why you need money. If you can do that and do it convincingly, have a good business model, literally any business can use equity crowdfunding.
Wow. Okay. Well, talk to me about just kind of, although any business could possibly take advantage of equity crowdfunding, I know there are compliance costs. I know there has to be a structure involved in really taking advantage of this. You can't kind of do this on the fly. So
Right.
can you talk about that a little bit more?
Sure. I mean, if anyone has ever gone through or seen a crowdfunding campaign on Kickstarter or Indiegogo or one of those places, you can pretty much go online if you have a video and you can type up what your company's about or what you're trying to raise money for. And literally on some of these sites, you can be online in an hour, trying to raise money. The fact is those people that do that don't raise any money. There is a
Exactly.
process involved in raising money through crowdfunding that involves building a crowd, doing that before you launch online, getting people excited about what you're going to do before you start this process. And so even on the rewards-based sites like the Kickstarters and Indiegogos, where you're not selling part of your company, the people that successfully raise money on there usually spend 3 or 4 months before they start their crowdfunding campaign, building up a social media following, talking to people about the money they're going to raise, telling them what they're going to do, getting them ready to come in and give them money. The same will hold true in the equity crowdfunding world, except now you have a whole new set of rules you have to follow. When you go on Kickstarter or Indiegogo, you follow the rules of the website. There's no federal laws or state laws that really apply to what goes on there. But when you're on a equity crowdfunding portal under this new law, now you have a federal law called the Jobs Act that you have to comply with. And now you have 686 pages of SEC regulations that you have to comply with. You're selling securities, and that means that you're governed by federal law and state law. And if you don't do it right, there are penalties, civil penalties, potentially criminal penalties if you don't do it right. So there is a process to getting prepared. It does involve a little bit of legal work. It does involve some filings with the SEC. It's not something you can do in an hour. It requires you to have some trained professionals helping you, sometimes accountants, people like yourself who help with businesses, people who practice in the area of securities law to make sure that you're not doing something that's going to violate securities law. Whole lot of things like that that go into it. But I don't want to make it sound like a horrible, oppressive, system. You can raise $1 million doing this from the general public by basically getting through those steps, doing them right, and going online and saying, hey, I need to raise money. I've got a cool business and you can own a piece of it. You've never been able to do that before. And so it's a remarkable opportunity, but it's not for the faint of heart. You've got to be prepared and you have to do it right.
I totally agree. So when you're counseling a prospective business person who's actually going to do an equity crowdfunding campaign, just kind of walk us through the steps. Sure. I know you can't go into details related to what exactly you do, but walk us through some of those steps so we can have an idea of really what to expect and to ground our expectations in some sense of reality.
And Kim, it's really different in every case because, people come to me. I've been in this field for 4 years now since the law passed. And so I've talked to literally thousands and thousands of people about this. And every situation is different. I typically start by asking somebody to tell me what their business is about. And keep in mind, this is only for businesses. This isn't, I want to go out and buy a new bracelet that's really cool and I want you to give me money, or we're getting married next month and I'd like you to pay for my wedding. This is for a business to raise money. You can do those other things on, some of those other sites, but
GoFundMe.
GoFundMe is they some crazy things on there, but this is a business. So the first thing is you have to have a business. You have to be incorporated or have an LLC or some type of formal business. And then I typically sit down with people and say, tell me about your business, tell me what you do, and then tell me what your funding needs are. Have you raised money? Do you need to raise money? How much do you need to raise? What's it for? How are you going to use this money? So a lot of this is really not much different than what I would do when I counseled someone to start a business when they come into my office and they say, hey, I'm thinking about doing something. It's the same kinds of questions because I need to have that basic foundation of what their business is about and what they want to do to be able to kind of frame how they're going to go out and position themselves to raise money. So the real first step is for me to listen to you, find out what you're doing, and then try to understand your business. I can tell you, I was speaking at the Wharton Innovation Summit over here in DC a couple of days ago. And I had several people come up to me after I had spoken with, great ideas. Wonderful ideas. A lovely young lady came up to me who's a doctor who wanted to raise money to help go into, basically do some research into a disease and to raise money. And I said, that's a great crowdfunding campaign, but not for equity crowdfunding. That's not a business. No one's going to buy part of your research. Now if she
Right.
came to me and said, I've developed a vaccine that can cure this disease, and I need to get it through the next stage of clinical trials. I have a business here, and I need to raise some money to do those clinical trials so we can take this product out to the market. That's an equity crowdfunding campaign. So you just have to start by looking at what someone's doing and figuring out how to frame it in a way that then is something that fits in a business and can be used to go out and raise money.
Okay, so that sounds wonderful. That sounds like it's not that difficult, not that burdensome.
No.
So how long is the process for you to file the necessary documents to get them prepared?
Well, this is it depends. And I hate to give the lawyer answer, it depends, but that's the lawyer answer that you're going to get here. The problem is people come to these types of things not prepared to do this. If your
Sure.
books aren't in order, for example, if you've been running a business and keeping your receipts on a little napkin and you don't have your QuickBooks or something where your books have been kept together, well, the first thing you're going to understand is you have to give some financial data about your business out. So if your books aren't in order, I'll tell people, go get your books in order. That's your first step. Number two, you got to make sure your legal structure is in order. I mean, sometimes people file a piece of paper, off with the state of Delaware, state of Virginia, state of Maryland, wherever, and haven't done anything to follow up to make sure that their company is in the correct position it needs to be. Their company may have not paid a filing fee and they're no longer existing. And all of these little things that are important, you got to make sure all those pieces are in place before you get to the stage. But assuming someone comes in and they've got their books in order and they've got all of their legal stuff in order and they're ready to go, the process isn't all that long to get to the stage of filing something with the SEC, but it generally takes a month or two. And in the meantime, there's things that you need to be doing to be prepared, like you have to create a video. I mean, how many people have a video just sitting around for their business? Right. You've got to create a video that talks about what you're doing. You have to put together presentation materials to be able to show people, like a slide deck or a pitch deck, as we call it, where you can show people this is what my offering is about. And the legal work really then requires someone to go through and look at your business and decide what are the risk factors and disclosures that the lawyers need to draft for you to tell people about the risks of your business. And that's really the one area that you really have to get an attorney for. And I hate to say that, the attorney is trying to get business. The fact is, if you try to figure out those things on your own, you're not going to know. Typically, in any kind of filing where you're selling securities, there are 10, 20, 40, 50 pages of documents sometimes where you're disclosing all of the risks involved with your business. If you leave one out and your business goes bad and people invested in your business and you didn't warn the public of this potential risk, you get sued. And that's the problem. That's why you have to have a lawyer involved in most cases to help you prepare these documents before you file them with the SEC.
I totally agree. We have the same kind of, and I'm hearing an echo.
Oh, I'm not hearing it on my end, so I hope it's not coming from me.
And I'll just keep plugging through. But anyway, now it's over. I don't hear it. But the bottom line for me is I have the same issue with people in franchise development. Yes. A lot of people think that, I can just create my DVD on my own, or I can create a franchise agreement on my own. And it's a recipe for disaster. Sometimes people just cut and paste something that they've seen from a previous FDD that doesn't even apply to them. The law is not even appropriate. It's from another state. I mean, it's just total chaos. And so, you need a lawyer to help you wade through this. And it's important. You certainly don't want to put your entire company in jeopardy and risk some kind of criminal action. So I totally agree with you. The other piece of crowdfunding generally, and equity crowdfunding in particular, that I think is very important is the issue of the crowd. Mm-hmm. Like, this is not something where you build it and the people come. This is not an issue where you have a great video, and I might be in the majority, I'm the minority in this, but it's not an issue where you just create this wonderful video presentation and everyone loves it, and then all of a sudden, poof, it just goes viral, and everybody decides, oh, I've got to have a piece of that, and you blow up that way. I mean, I just think that when companies talk to me about crowdfunding, whether it's a startup or whether it's a more mature company, the biggest issue that I have is, what does your network look like?
Mm-hmm.
And your network needs to be both online, it needs to be offline, but that is the essence of crowdfunding. If you do not have a crowd, you're wasting everyone's time. And it doesn't really make much sense to me to do equity crowdfunding or reward crowdfunding for that matter. If that isn't taken care of, and people don't understand, relationships and crowds take time. Unless you have something very unusual like Oculus Rift or something like that. And even then, I think their first crowdfunding campaign failed. You have that. The hardest part of this, outside of the legal dimension, is developing that community or that tribe of people that actually is committed and wants to invest in your company. That's my take on it. But what are your thoughts?
No, Kim, you're absolutely right. And statistically, in the crowdfunding world, most people, I mean, this is just cold hard facts. 80% of the money that you raise on the beginning end of a crowdfunding campaign comes from people you know. And that doesn't mean people that are your best friends or, your family members. It means people in your network, your social media network, your neighbors, your coworkers, the people that you can reach out to through email. 80% of the money that's raised comes from closely held sources. The companies that raise a lot of money get beyond that. And if they can get to that second level of those people, your friends, are now bringing in their friends, you've just expanded your universe of potential donors or investors in the crowdfunding world by a ridiculous number. And the ones that go truly viral, the coolest coolers of the world that raise $10 million, the brew dogs of the world that raised 26 million pounds in the UK based on equity crowdfunding. Those companies that raised the huge amounts of money got beyond that first level, that second level, and then that second level went out to everyone. And that's where it explodes. Just think of the exponential power that's involved there. You take those maybe 300 or 400 people that you have, and that turns into 3,000 or 4,000, but that exponentially may grow to hundreds of thousands of people if those people start talking about what you're doing on social media, reaching out to their friends, and then the media gets involved, and then all hell breaks loose. And it's what you said before, Kim. That's where the money starts raining in. But the reality is, if you don't start with that core, unless you have something incredibly special that the media picks up right off the bat, the chances of you raising a lot of money in crowdfunding are not good. So building that crowd is very, very important to all forms of crowdfunding before you start, not after you start, but before you start. And you should be doing that for your business anyway. Why wouldn't you be promoting your business?
I agree.
A crowd to follow you on Facebook and Twitter and LinkedIn and doing these things. That's what you do to market your business anyway. You're building the same crowd you're going to go to raise money from. Do it now. Anyone who's watching this who's thinking about crowdfunding, you should be building a crowd now. If you're not thinking about crowdfunding, you should be building a crowd anyway because you need it for your business. So it makes no sense to not have done this already.
People don't understand. I'm holding up my weapon of mass destruction, my mobile phone. And a lot of
very close to the White House, and they're probably monitoring this. So there's a good chance a drone strike is coming your way now. Let's say it's just a weapon of mass marketing. Let's use that.
A weapon of mass marketing. But people don't understand, the world has really changed. I mean, it's changed in the past 7 years dramatically as it relates to marketing and mobile marketing in particular. And unfortunately, Kendall, we appreciate the fact that people should be developing their network, and they might be doing it in traditional means with chambers of commerce, and they might be going to BNIs, and they might be doing all kinds of conferences and wonderful things, and those are great. But you would be surprised at how many people discount the value of social media. They do not see an immediate ROI, and they don't understand that just like in face-to-face networking, you're not going to see an immediate ROI. You're going to have, somebody doesn't meet you at a conference and say, "Oh my God, I want to give you $1 million."
Right. Right. No, and Kim, that's a great point because, I speak all over the place. And every time I leave any one of these speaking engagements, I always have a pocket full of business cards, a pocket full. But I also end every one of my speeches with a screen up that has my social media contacts on it. Follow me on Twitter, come to my Facebook page. Here's my LinkedIn address. I want people to engage with me. And every time I speak, which is usually 2 or 3 times a week, I leave and I have a whole pile of business cards. And the first thing that happens is those people all get followed on my social media. They all get connected on LinkedIn. They all become part of my crowd because I want to be able to reach out to those people, not just by telephone, not just by, meeting in person, but also, I'll give you the classic example that most people that are out there that need a marketing 101 lesson. The old days of, trying to get a reporter to follow up on an email. I remember fax machines where we used to, God, it sounds so archaic now, but we used to send faxes to reporters to get them engaged in something.
Wow.
Reporters don't use faxes. Reporters don't read emails for the most part anymore. They correspond with them on Twitter. That's how you correspond with reporters now. So if you're going to be promoting a crowdfunding campaign or an equity crowdfunding campaign, you should look for reporters that are in the area of your business that might cover your business or might be interested in it. You should start following them and engaging them on social media. Not just follow them, but send notes to them, retweet their messages, get them to know who you are, send them a private message telling them you like their story. Do something to engage with those people because later on, when you have something that's newsworthy that they may want to report about that could really blow your crowdfunding campaign through the ceiling, you're not just somebody reaching out to them going, as a writer for Entrepreneur Magazine, I can't tell you how many, I get 20, 30 pitches a day from people that want me to write about them. First time they've ever reached out to me is the day that their Kickstarter campaign launches. And you know what happens to those people? Delete, 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 delete. And again, it's not being rude. It's just, make an effort here. Reach out to me, show me your product beforehand, get me excited about it. Maybe I will write about it, but someone I'm just on their blast email list with everybody else who writes about crowdfunding, the chances of me writing about them is almost next to nothing, So these are they're just common sense. It's just common courtesy, use the tools that you have and use them right.
I agree with you that it's common sense and common courtesy, but for whatever reason, I think that the rules that apply to Google AdWords and search engine optimization, people want that to relate to the expansion of their crowd and social media, and it does not apply. They are apples and oranges.
Absolutely.
And so they expect this immediate return on investment. And so when you tell people, in my humble opinion, if you're serious about this, I would take a year. If I
the
that's
longer
just
the
me.
better. No, the longer the better. I tell people minimum of 3 to 6 months, but if you can do it for a year, by all means, the more people you can build, the more relationships you can build, the better you're going to be.
I completely agree. Well, we've talked a lot about entrepreneurs and small and businesses that would be interested because honestly, that's the number one. That's the kind of person that comes to me and asks me, what about this equity crowdfunding? The flip of that is the investor. And let's talk a little bit about what can the general public expect from this? Or, is my mother going to be able to invest and become rich tomorrow? Can we all quit our jobs and just retire?
Well,
go to Cabo San Lucas and just end it all. What? Tell me.
The funny part about this is, the ability, these are all investments as a general rule in early stage companies. So you're talking about companies that are either just getting started or been around for a couple of years and are growing. So, any investment in equity crowdfunding for the most part is going to be a long-term investment. It's going to be inherently risky. You're going to be investing in companies where the failure rate is pretty high. But you're also investing small amounts of money. You may be investing $100 or $50 in a company as opposed to tens of thousands of dollars where the risk is minimized. And there are protections in this law that's coming out that say, anyone who wants to invest can only invest up to 5% of their income. It depends. There's a complicated formula, but it's 5% of their income or $2,000 max, depending on certain factors. But the sites will help you based on how much your income is and how much your net worth is. But the reality is anyone can invest. This isn't just for rich people. Your mother is a rich person, I'm sure, but your mother, my mother, whoever wants to invest, my grandmother, these people.
She hasn't told me. I don't know.
Out one day. But the bottom line is anyone can invest in these deals. And the theory is you're helping a company grow and you are getting in at the ground floor. So, think about someone who might have invested in Facebook if they had the opportunity to do that when Facebook was in their early stage in their first year. I mean, the return on that $100 would be hundreds fold in terms of what came out. I mean, classic example of this is what you mentioned, Oculus Rift. So, Oculus Rift is a company that was an existing company. They raised several $1 million doing rewards crowdfunding on Kickstarter, where they gave away their virtual reality headset to people in exchange for $300. A few months after they raised this money, Facebook bought them for $2 billion. And the company was bought, and all those people that bought the headsets were thinking, well, do I get part of that $2 billion? And the answer is no. They just paid $300 for a headset that hadn't been made yet. Had that been an equity crowdfunding campaign, if it had been legal at the time, which it wasn't, but if that had been, that $300, if you do the math, probably was worth about $20,000. So
wow,
that would have been a return of, a huge return in only 6 months. Now that is, we call those unicorns in the business.
Yeah, that's
very
true.
few and far between. And most of these investments are not going to give you that kind of return. And most of these investments, in fact, probably will fail or not return any money to you ever. That's just statistically the case. And I hate to say it, but that's the truth. The failure rate for startup businesses is very high. But you're investing a small amount of money. You're taking a chance. You're becoming a brand ambassador. You're going to pull for these companies. And you're going to see some big home runs come out of this. And there's going to be some big success stories, primarily because you have that power of the crowd behind you. And you think about it, Kim, back in the past, you never had that. The ability to grow so fast, if you can get 50,000 people to give you $50, if you have a home run of an equity crowdfunding campaign, let's say 20,000 people give you $50, okay? You got 20,000 brand ambassadors out there who are talking about you on Facebook, tweeting about you, telling their friends about you, passing the word about you. All of that helps your business grow. It's not just the money they give you, it's the publicity and marketing you get from those people that help you to grow. And not to mention the marketing you're doing for your equity crowdfunding campaign is also helping your business grow. You're not just raising money, but you're out there in the press. People are talking about you on social media. You're getting more business. You're getting more awareness, more brand awareness. This is a plus situation for everybody if you do it the right way.
I totally agree. I'm very excited about it. I just want to ground people's expectations again in reality. I tried to do that for the business owners. Now I want to do that for the folks who are investors, because you'd be surprised at some of the conversations that I've had. Some people think that this is like that day trading phenomenon, if you remember.
Well, and I can tell you one thing, Kim, that's very important to understand is these stocks are not tradable. So I know. No, but it's important for your audience. You and I know that, but people who are thinking they're going to day trade these, well, I'm going to buy it now at $5 a share, and then I'm going to go sell. These stocks are private stocks. They are not liquid. They're not tradable. You have to hold on to them until the company does something, which may be a year, 2 years, 10 years down the line, that lets you do something with that stock. So the reality is there's no market to trade these in. So if anyone's thinking, well, I'm going to go buy these on the first day and buy as many shares as I can, then go trade them somewhere, you can't do that with equity crowdfunding stocks. There's another part of the Jobs Act called Regulation A. It's very similar to this. It's already in existence. We've done, a whole bunch of this work in the last year since it went into effect. Those stocks are tradable. And so that's a different story. But these new stocks that are going to come out of May 16th, out of this equity crowdfunding round, can't trade them. They're not liquid. You can't go to your broker. You can't sell them to anybody. You have to hold on to them. So that day trading, get rich quick scheme stuff is not going to happen.
Awesome. I'm so glad you said that. And I want to put that on a loop on Vine or something like that. Very important to know.
It's very important to build it. Long term, these things could turn into something special. That's why I use examples like Facebook. It took Facebook 7 or 8 years before they did an IPO. They didn't just start in their dorm room and then all of a sudden they were sold for $14 billion of stock. That took 7 or 8 years and a billion people joining their site before they got to that stage. But if you had those shares and had held them for 7 or 8 years, you had a bonanza and a half on your hands.
Yeah, you did. You did. All right. So I'm an investor. You've got me sold. I really want to do this. And I have some extra change. Uncle Sam was nice to me during tax season. So I've got a few $1,000s to blow. I'm feeling wild and crazy. Where do I start? Where do I go? Where do I begin?
Well, the simple answer to that is we don't know yet, because there are no equity crowdfunding websites yet because they're not legal until May 16th.
Well, okay. After May 16th. After May 16th.
There are going to be sites that are going to pop up called funding portals. And this is a brand new thing that was just created under this law. So you won't be able to do this on Kickstarter. You won't be able to do this on Indiegogo. You won't be able to do this on any of the existing sites that are out there. These are brand new sites. They may be affiliated with some of those old sites, but they have to be brand new websites that are governed by SEC rules, governed by FINRA, who regulates all the security sales. Government's watching you. Different type of website. It'll look like Kickstarter, but you'll go to a funding portal. You'll watch a video. You'll be able to look at all the legal documents. You'll be able to see what the company is all about, look at some pictures, and then you'll be able to invest right online by clicking on a button, filling out some forms. It's a little more complicated than buying something on Amazon, but not much. And then paying for the stock, and you are a shareholder right there and then. No issues, no waiting. It's just done right online through one of the funding portals.
Oh, that's wonderful. That's good. That sounds so just like a dream.
If anyone's ever purchased anything on Kickstarter, it's really maybe one extra step beyond what you would do on there. The reality is, in these investments, you're not allowed to use credit cards. So you'll have to either have the money ACH'd, meaning you'll put in your routing number and your bank account number and then push a button and the bank will transfer the money, kind of like using a debit card. Or you'll have to wire the money, which again is the same process online. Or you'll have to write a check. But legally, stockbrokers and broker-dealers won't accept credit cards to process stock transactions because people can reverse those charges. And so that presents a whole lot of legal problems. If you're in a equity crowdfunding campaign and someone says, yeah, I want to buy $1,000 worth of your stock, and then all of a sudden you no longer can keep that money and you gave the stock to them, you just created a whole lot of issues. So that's why credit cards aren't allowed. But that's going to change. You're going to see 3 or 4 years from now, SEC is going to pass some rules and there's going to be some legislation that's going to let you use credit cards too. But right now you can't do that. So that's really the only big difference. That, and you'll sign an agreement, electronically online that says you're purchasing the stock.
Awesome. Last question I'm going to give you, and because I know you have to take another phone call, and thank you so much for graciously
it's my pleasure.
giving me your time. But I know in America this is kind of foreign, but I know in other countries, in Great Britain, I believe,
yes,
they've been involved with equity crowdfunding for a bit longer, and there are some success stories. And I think you've shared with me a case study before about a brewery or something like that. Could you share that? Because I think it's a wonderful way to give people a clearer vision of the potential of equity crowdfunding.
It's one of my favorite stories for a number of reasons. Number one, it's the most successful equity crowdfunding raise ever. A company called BrewDog, BrewDog. If anyone has the Esquire network, there's a television show called BrewDogs that's been on for 3 years that involves the 2 founders of this brewery in Scotland. 2 really funny, smart, crazy guys from Scotland that started a brewery basically out of the back of their pickup truck with a dog. Both these guys, by the way, are master cicerones, which is, for people that don't know what that means, I didn't at first. There's only 11 of these people in the whole world that are the master brewers of beer. So they take tests, they go through this whole thing. So these 2 guys actually know what they're doing. They created their own beer, and they entered into a contest, won the contest, and got a distribution deal to go into one of the largest grocery store chains in the UK. They didn't have the money to be able to grow their business and do the things they needed to do, so they went to crowdfunding. And the UK had a law very much like the law that's about to be passed. And under that crowdfunding law, they raised the money they needed, and they went through 3 more rounds, one of which just ended. So this has been about a 3.5 year process. They've raised £26 million through crowdfunding, through equity crowdfunding, by selling small parts of their company. And they have now become a company that is the largest craft brewery in the UK. They have 650 employees that they now pay as a result of crowdfunding. They're in 44 different cities that they have bars, including Tokyo, Hong Kong, Sao Paulo, all over the UK, all over Europe. And now they're building a brewery in the United States in Columbus, Ohio. and they're going to do an equity crowdfunding raise here. I'm representing them. I'm doing their raise on our website, bankroll.ventures. We're going to duplicate what they did over in the UK. We're going to be the largest, hopefully, the largest equity crowdfunding raise ever. We're using the other law, Kim, the one that lets you raise up to $50 million because they need, they don't need just $1 million.
Right.
But what they started with when they did this in the UK was a smaller crowdfunding raise, much like what this new law lets you do. So you talk about a company that started with 2 guys and a dog in the back of a pickup truck that now employs 600 plus people around the world, that has been profitable every year. It's the fastest growing food and drink company in Europe for the last 4 years. They're expanding and building a huge brewery in the United States where they'll employ hundreds more people. Think about what that's done for the economy. Think about all those people. Think about all those fans. And what's great about this is they had 46,000 people invest in the UK. Think about having 46,000 people who are on Twitter, Facebook, going to your bars, your 40 bars around the world, bringing their friends to the bars, holding up their beer and saying, hey, I own part of this company, and telling people about that on Facebook and Twitter and email and conversations at the local pub. Think about what that does for your business in addition to the money that they got. Basically, they got people to pay them to become their advertising arm. They've never purchased an ad themselves. They don't purchase advertising. They don't need to. They have 46,000 brand ambassadors who have invested in the company. That's what crowdfunding is all about. And they're going to do that here in the United States. You'll see it on bankroll.ventures in about 30 days.
Awesome. I'm so excited. And we didn't even talk about that.
No, it's we've kind of kept it under wraps. We're still waiting for the final qualification from the SEC. It's a little bit of a process because that law is a little different. It takes a little longer, but we're expecting to get that hopefully in the next 30 days. And by hopefully late May, early June, you're going to actually see these guys. And believe me, you won't miss them. They'll be in a lot in the media, and they'll be doing a lot of fun things that you're going to laugh at because they're just crazy marketing guys smart guys who really know what they're doing.
Well, I would love to get that information and actually pass it on to my clients and also people who are just following me, because it sounds terrific. And the key part to me that I like that you really ground in this kind of discussion on equity crowdfunding is the brand ambassadorship. The idea that people are more likely to talk about a product and promote a product when they are invested in a company.
Yes.
The bottom line is I'm going to tell everyone that I know about this particular beer, because when that beer company does well, I do well.
Bingo.
And it seems incredibly intuitive. But I'm not sure if the public and businesses really appreciate that and have put all of that together.
No, they don't.
And I think
And Kim, listen, just to even take it a step further, no, and I'm not insulting people. It's just people are so used to raising money is one thing, advertising is another. This is where you get to take money that you are using to raise money. The marketing money you're putting into a crowdfunding campaign is also marketing money for your business. And that's what people don't get. And so a lot of times when I start talking to people and say, look, especially with this other law that BrewDog is using, it's very expensive to use. It's not for a startup, it's for an existing business. But spending $200,000 or $300,000 on the fees, and that's for the other law, it's very expensive. Most of that is marketing the campaign, getting it out through Facebook, getting ads on Google, paying for, different things, PR and all the other things you do. It's very expensive. And to do that, sometimes a business that's not as successful as BrewDog goes, well, we don't have that in our budget. I say, well, what do you have in your marketing budget? And well, we have that in our marketing budget. Well, you're marketing your business when you do this. If you're doing it right, you're not only marketing for the company to raise money, but you're also marketing your business and building brand ambassadors. It's just diverting funds from one area to another, but doing the exact same thing.
And what I love about having conversations with you is that you're one of the few lawyers that can put that together. And that's not an insult to a lawyer, but you understand what I'm saying. Many lawyers are very technical.
Right.
They understand the rule, but they don't understand the context. And the beautiful thing about working with you, and why I love having conversations with you, is that you can put things in context. We really are undergoing, it's, you think it's, I'm saying this just because you're participating, but I have a legal background, and
Right.
I come from an IP space.
You've been
Talk about technical people.
right.
The problem, and I'll end here, and the opportunity. And again, I'm going to go back to this phone kind of point that I was trying to make before, is that advertising and marketing has really been decimated by this tool. And the crowd and peer-to-peer everything is becoming more and more prominent.
Yes.
And so I love the analogy that this is akin to putting money in a marketing campaign rather than putting it into a television campaign or a radio campaign, and nobody's watching television anymore, hardly.
Perfect.
Or no one's listening to the radio anymore, but they are spending 80% of their time on this.
Yes.
And a good portion of that, they're spending it on social media and listening to their peers.
Yes.
And so if you can get their peers to be your brand ambassador, to be the influencers, to be the spokesperson, to tell everybody, I just invested in the best thing since sliced bread, and here are the 5 reasons why, and I want you to take advantage of this beer or take advantage of whatever. This is the new day that has arrived for business and marketing and advertising. And I'm really excited for it. I'm excited about equity crowdfunding. I'm excited about what's happening with BrewDog. And I really do think that you are pioneering a space, but it's just going to explode, because the way we are operating and conducting business and marketing and word of mouth has dramatically changed. It's no longer traditional advertising. And if people really want to be next generation pioneering businesses, they have to look at equity crowdfunding as marketing. They have to look at equity crowdfunding as advertising. It really doesn't make any sense to not think of it that way. And so it's much more than just traditional fundraising. So I'm excited that we talked about this, and I promised that I would end at 1:55, and we are almost there. So thank you so much, Kendall. I've recorded this, and I will send you the recording, and I'm also going to write about it. Thank you so much. Take care.
Thank you, Kim. It's a pleasure to see you and a pleasure to help, and just thank you for having me on. I appreciate it. Thank you for spreading the word about this wonderful law. That's what we need. We need more people talking about this. People don't know about it. Thank you for doing this.
Oh, thank you. Thank you. Take care. Have a great weekend.
Take care. Bye-bye.
Bye-bye.